Well, the City of London has been reflecting on the news that CitiGroup, the banking giant, is to cut more than 50,000 jobs, many of them expected to be in Britain and the United States of America. Our economics editor Hugh Pym reports.
The latest bird's-eye view of the economic downturn, and it's not pretty. The banking giant CitiGroup is shedding 52,000 jobs worldwide, half layoffs, the other half through selling businesses. Also today, the British motor industry was preparing to ask the government for loans to tide it over. Car sales have slumped. Just another snapshot of an economy which even the employers group, the CBI, admits is in for a really rough time.
The economy will contract by some 1.7% over the course of next year. That's probably very similar to the recession of the early 1990s. Unemployment will be running up really very rapidly. We expect 2 million unemployed by the end of this year and not far short of 3 million by the end of next year.
And with that, another ugly prospect, deflation. It's already happening in the housing market. Prices fall, buyers sit on their hands waiting for them to fall even further, so activity grinds to a halt. Could it now happen across the wider economy, with prices in the shops falling and retailers struggling even more to shift their goods? It's not a big problem if it's just things like petrol prices coming back down again, but if deflation takes root, there'll be real headaches.
We need to draw a distinction between a temporary period of negative inflation because of previous increases in commodity prices unwinding and a more sustained generalized fall in prices in the economy. The latter would be a much bigger problem for any economy because then the deflationary psychology has taken hold and that may have a negative impact on consumer behavior.
Another negative is that debt becomes even more of a burden for consumers. That's because wages and prices fall, but the value of the loans doesn't. For most of this year here at the Bank of England, the main concern has been high inflation. But now it's the opposite, the risk of deflation, with cost of living increases falling below the 2% target or even going negative. The latest inflation figures out tomorrow are expected to show a decline from the rate of more than 5% seen in September. The bank hopes inflation will fall, but not too far, and the economy will start motoring again by the end of next year. But it acknowledges the picture could get gloomier. Hugh Pym, BBC News.
A series of allegations made in a BBC investigation